Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield. I'm your host, Meghan Grebner, with this as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Our program is brought to you by the Feedstuff Finder from the University of Missouri. Feedstuff Finder was developed by the University of Missouri Extension with funds provided by the North Central Extension Risk Management Education Center and the USDA's National Institute of Food and Agriculture. To find a link, make sure to open up our weekly livestock market update newsletter that will come out Saturday morning. All right, we're going to talk some livestock slaughter. We're going to talk about a cattle on feed report that is definitely very interesting on this Friday. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, on the cattle side this week, we saw stronger prices generally. Live fed cattle were $1.70 higher. That puts them $25 over where they were a year ago. So strength on that side. Feeder cattle markets also stronger this week. We're going to call those 3 to 5 higher on the week. April live cattle futures contract was up 45 cents. And the April feeder contract basically unchanged, down a nickel on the week. On the beef side, choice box beef up to $2.50. We've been well above $3 here for a period of time. On the hog side, cash barrels and gilts were up nearly $1 this week. The lean hog futures, April lean hog futures contract was down to $2.25. And we saw a modest increase in the pork cutout value, up 10 cents on the week.
It definitely appears that people were busy and actively competing for some fed cattle this week, specifically with some of those regional markets. It was very interesting watching those numbers unfold.
Yeah, absolutely. And it's we get to talk cattle on feed here in a minute, but that may take a little bit of the wind out of the sails here for a period of time when we think about where these cash prices go the next few days.
Scott, we're going to talk weekly slaughter. Down this week on the cattle side of things, not as much as I thought maybe we would be, considering the fire, which I think we should mention, in Liberal, Kansas at that national beef facility. They did say today that they're hoping to be back open on Monday. But I guess I was looking for a little bit more of a pullback and we didn't see it.
Yeah, it certainly seemed that might be the case, but USDA is reporting a run for the week ending March 23rd of 598,000 head of cattle. That's only 3,000 less than we did a week ago, 30,000 less than what we did last year. On the hog side, a run of 2.532 million head this week. That's 66,000 more than we ran last week, and 59,000 more than we ran a year ago.
Scott, as we take a look at those numbers, we're going to talk year-to-date cattle and hog slaughter. How are they running comparing them to where we were a year ago levels?
Yeah, when you look at the cattle slaughter now, we're 5.4% below year ago. Don't forget we had some pretty short weeks there in January when it was so bitterly cold. So I think that's going to come up as we go through the next month or so. But on the pork side, hog slaughter, that's up 0.8% relative to 1 year ago.
All right, let's get into that livestock slaughter report as we take a look at those February numbers for beef and pork production. One extra day in the month to note. But I think the other thing is talking about beef cow slaughter, which we'll get into as well.
Yeah. So beef production, 2.2 billion pounds. For February of this year. That's 3.6% above where it was in February of 23. And as you point out, this year being a leap year, we had an extra day of production or slaughter happening. When you look at total cattle slaughter, it was up 2.6% February this year relative to a year ago. And we also added 8 pounds to dressed weights on the cattle side. So the combination of higher cattle slaughter, and that was really steer and heifer slaughter, both that were higher, added to what was higher beef production. If we switch and look at pork for a minute, a 2.4 billion pound production of pork in February of this year. That's 9.9% above where it was a year ago. And so year to date on the pork side, 5.7% higher pork production. I think that tells us a little bit why we've struggled with especially out of the gate with hog prices with these kinds of runs. Hog slaughter, 10.1% above in February. Weight's really unchanged on the hog side of the equation.
Scott, obviously, we continue to track beef cow slaughter. As we have that conversation, did you look at what happened in February? What is your takeaway there?
Well, I think when you look at the February data, so beef cow slaughter down only 3,000 head in February relative to a year ago. If you recall, we were down pretty hard in January. We've made up for that. So the year to date being down only now 43,000 head, all of that really was happening in January. It just keeps telling me, we're not doing anything that really suggests we're building the herd. And I think when you look at heifer slaughter as well, we saw February heifer slaughter up 39,000 head. It tells me that we're not holding heifers back either. And when we look at that slaughter data.
All right, cattle on feed report. As we look at that March report, let's start first inventory and how it stacked up compared to pre-report expectations.
Yeah, so all of this is not so positive news. I think when we look at what we got out of the report today, USDA told us March 1 on feed inventory of 101.3% of a year ago. That's outside of at the upper end of the pre-report estimates. The range was 100.1 to 101.3. So not surprising for it to be higher. We just got it at the very upper end of the pre-report estimate.
Cattle placements, as you take a look at placements for February, I would assume a couple of different things coming into this number. But wow. I mean, I look at it and it's a number that stands out to me.
It does stand out. All right. So we'll start and remind ourselves one extra day because of leap year. January was bitterly cold and we had a lot of those auction markets closed down for a period of time. And we remember that January placement data was down, not as hard as some would have thought it was going to be, but we probably pulled some calves from January into February because of all that cold weather. All right, I can postpone this bad news for only so long. When you look at placed in February, USDA told us we came in at 109.7% of last year. That was almost a full percentage point outside of the upper end of the pre-report estimate. The pre-report midpoint was 106.3. We know we've had a lot of big auction sale days occurring. So higher placements, again, is not a surprise. So I guess I take this a little bit further just to remind us that we're a far cry from how tight placements may get in the coming period of time. We have been coming lower, but when you look back at 2015, early 2016, and you kind of take that rolling average of the previous 12 months, we got as low as almost a little below 20.5 million head of placements. We're sitting here today at about 22.5 million head. So we got, if we mimic anything like what we did last time, we still have a ways to go. So this isn't good news in terms of what we got out of today's report, but it just reminds me to say we're going to keep getting tighter. If any of this data we're seeing otherwise holds any water whatsoever.
When we talk about numbers getting tighter as we look ahead, talk to me about thoughts about where prices go, thoughts about what's it going to take for producers to start holding back and expanding. And then we think about that's going to be tighter yet on supplies, right?
That's correct. We haven't gotten to really to what that traditional part of the cycle looks like. So what's this take? I will at least say I think we need still some forage recovery in some parts of cattle country. There are folks who are, and I think many folks in better shape than they would have been months ago, but not in any kind of recovered state in terms of forage supplies. You've got pastures that, what are they going to do this year? How well are they going to come back? How much work's needed? So I think we got to get those forage supplies in better shape. I think cheaper fertilizer prices may have gotten us higher application rates than we've seen for a few years. So good rains maybe even accelerate what will be better forage supplies, but that has to happen. So although we're talking about record prices, we're just now starting to talk about profitability at the cow-calf level that would rival where it was in 2014. So profitability's been slower because costs have been higher. So I think those two things have to happen to the tightness that you refer to. There's no indication we're holding heifers back. And so that certainly will be another drain on beef production. I keep saying, what are we really beginning to have happen? Heavier weights trying to offset some of the decline in beef production, increased imports, decreased exports on a volume basis. So the net to domestic consumers, although it's going to get tighter, we've been offsetting a little bit of that. I think it keeps getting harder as we go forward to continue to do that. I don't know where the upper end of prices will be. I keep saying my expectation is we go higher as we go through the summer months this year, but there's downside risk, and that downside risk is all demand related. And that is something that we need producers to think about how they want to do risk management.
Plenty for us to talk about for weeks and months to come. Scott, as you look ahead to next week, big report week for us on all fronts.
Yeah, that's right. I'm really curious next week. So we get cold storage on Monday, but the big ones for me here in the middle. So hogs and pigs come out next week. What are we going to say about breeding inventory? Are we going to be down 2 or 3%? Only down 1%? Big discussion here, as well as then pigs per litter. We also get prospective plantings, which I think, although we sometimes don't focus on this, we plant more corn than maybe we would have thought a month or so ago, because early spring's gotten us more fertilizer anhydrous on. That could be helpful for cattle feeders and hog producers. So those two are the big ones. We finished the week. Restaurant Performance Index.
Well, can't wait to chat with you next Friday.
That sounds good, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens in the markets daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.